Good afternoon. Thank you very much for everybody joining here today. It's another webinar that we're going to be hosting by MAGNiTT. And today, a very exciting subject for me. Some of the reflections and takeaways that I had from my recent trip to Singapore, highlighting the opportunities of what we're beginning to see and witness as the evolution of a Southeast Asia MENA corridor for venture investment activity. My name is Philip Bahoshy, and I'm the founder of MAGNiTT. For those of you that may be joining us and learning about MAGNiTT for the first time, we're a dedicated venture capital data platform that focuses on research and analytics, predominantly for the time being in Africa, the Middle East, Pakistan, and Turkey, while we expand into Southeast Asia, starting with our foray into Singapore. And in terms of kind of high-level numbers, you can see that we have about 27,000 startups on the platform, currently covering 74 different countries with over 12,000 transactions on the platform. So very much catering for venture capital insights. To start us off, I'm going to anchor the conversation a little bit because I think it's important for those joining to understand, as I go through the presentation, some of my key takeaways. Market similarity across both MENA and Southeast Asia. A clear perception gap, which is exactly why I'm looking to try and do the webinar here today on both directions. Experienced venture capital entities in Southeast Asia that the Middle East can learn from. Cross-pollination, both organic and inorganic across both geographies. And a growing political tie, whereby we're seeing interest at a much higher level than that then trickles down into the venture and economic development activity. I'll go into more of those points later in the presentation. At a high level, let's put a little bit of context into Singapore specifically in this presentation versus the geographies that we currently cover. So we, as MAGNiTT, as I mentioned, cover Turkey, Africa, the Middle East, Pakistan. And here are some of the numbers in terms of positioning for the wider region. When you aggregate them over the last 5 years, you can see this accelerated rate of venture activity in the last 5 years. Without going into all of the detail and a different presentation for sure, 2021 and 2022 were record years of capital investment in what we coin as the emerging venture markets. Why emerging venture markets? Because they're not necessarily developed venture capital markets like the US and Europe, but they're not emerging markets in terms of economies. They are emerging venture markets that we cover. And as you can see here, 2022 and 2021 almost flat in those geographies in terms of the total number of transactions and the total amount of capital that's being deployed. If we deep dive into the Middle East specifically, where we're headquartered here in the UAE, for instance, you see that there is a similar path with 2022 being almost slightly higher in terms of capital against the backdrop of the slowdown in investment activity. Again, I'll deep dive later in what's happening in 2023, but this provides a little bit of context on an annualized basis. If we then put that in the context of Singapore, I think, again, not completely dissimilar attributes in terms of investment capital and deal flow. In fact, a similar trend whereby in 2021, you saw a record year, similar to the global trends that we saw. Actually, 2021 was much stronger than 2022, with almost flat deal flow in terms of investment activity, in terms of deal transactions. Now, in this particular case, in full transparency, we used the source of CB Insights that was able to provide us 5 years worth of data. Now, to note, we are working actively to have all data on the MAGNiTT platform for Singapore. This will be completed by the end of H1. We follow our verification process and methodology, which you can find in research reports that we publish. But effectively, this provides us a little bit of a benchmark. Again, we wanted to put this down at a country level. And why is it interesting? Well, it's very clear when you put in the investment activity of a 5 million or 5.5 million population country in the context of all of the MENA region, that actually Turkey, and this is 5-year aggregate figures of transaction levels, Turkey, which accounted for 16% and the highest number of transactions in the geographies that we cover, is almost half the number of transactions as was seen in Singapore over the last 5 years. One of the challenges that I was given only last year by a minister of a high-ranking geography here in the region was, we don't want to be comparing ourselves with regional countries. We want to be aspiring to international geographies like the US and China. Well, the reality is, even in other emerging venture markets, similar like Southeast Asia, a country of 5.5 million people, it's double the size of investment transactions to that of Turkey that was the most populous here in the region. In terms of invested capital, UAE ranking first in the last 5 years of invested capital of about 4.5 million, again, is 6 to 7 times smaller than the investment capital that went into Singapore. Now, an interesting anecdote that I picked up while I was in Singapore is that Singapore is actually the hub of investment capital for Southeast Asia. I'll come on to some of the demographic differences and similarities, but ultimately, where we see here in the region companies set up in Delaware, BVI, Cayman Islands, and the likes, Singapore is not only the holding company for funding, it is also the operating entity for operations across Southeast Asia. And that's an interesting nuance when it comes down to investment capital into Southeast Asia. Let's just quickly focus into some of the nuances because we're already closely coming up to H1 of 2023. If you looked at 2022, again, the emerging venture market saw this drop down of activity. The US saw about a 40% drop. Asia, according to CB Insights, and I'll come on to that definition, a 40% drop, with MENA seeing a slight increase. Well, the reality is that at that level, many of the geographies at a country-based level saw declines, except for Saudi Arabia, that saw an increase in investment activity in 2022 compared to 2021. In fact, when you look at the global trend of investment activity by quarter, it was already the 5th quarter of decline of investment capital and the 4th in terms of transactions. Now, if anyone had joined our previous webinars for the MENA region and emerging venture markets, you would have noted that actually Q1 of 2022 was one of the strongest quarters. In fact, across emerging venture market, it was the strongest quarter, and the subsequent decline happened in Q2. Here in MENA, similar to the global trends, it was Q4, but you're now seeing the impact of much of the slowdown in venture capital activity globally. In fact, it was the lowest in Q1 deal flow dating back to 2018. And when you strip out mega deals that have very much impacted the region here, late stage investments, specifically coming from the likes of Saudi Arabia, you see that it's almost the lowest amount of invested capital as Q4 2020. Singapore, however, had already started to see declines in investment activity dating back to Q3 2021. And in fact, the similar trend at a global level, whereby it's 5 progressive quarters of decline in investment activity. So everyone is feeling the pinch of the venture capital ecosystem. I was listening to a local podcast that was produced by 3 VCs, and they're talking about the impact of the global slowdown of venture capital activity, as well as what's happening in Singapore and the impact that's happening at early stage investment. So some of the parallels that you are seeing are very similar, despite the magnitudes of investment that are happening across the 2 geographies. Now, I think it's important to try and understand some of the nuances of the benchmarking. I mentioned this point. So one of the things that we are trying to solve for, and we are very focused on, is providing local insights for venture capital to our clients. However, we cover an emerging market. So we like to call ourselves local versus emerging in terms of the insights that we can provide. CB Insights, which is one of the players, including PitchBook and Crunchbase, at a global level, as you can see, the magnitudes of investment capital that are happening in the US and Europe are focused heavily in those more developed and mature markets in terms of venture activity. And Asia, and I make this point, from the definition of CB Insights, puts together China, India, Israel, Singapore, Japan, Middle East, and I've listed out all the geographies on the right-hand side. What we're keen on doing is continuing to focus on the local emerging philosophy. We will provide data, research, and insights for country-level reports, as well as aggregating it across what we've coined the emerging venture markets. And this is what we plan to do moving forward, starting with Singapore in H1, and then moving on to other Southeast Asian benchmarks in H2. And we started to try and understand similarities and differences. This particular chart looks at, as you can see on the x-axis, GDP in 2022 versus population size. And our goal is to try and understand at an operating level, when you exclude the likes of India, China, and the US, which are almost self-sufficient markets in themselves, what do other geographies do when they try to cluster? And this goes to point number one, similarities in the demographics and the operational business model of being able to scale in each of the markets. One of the things that are very clear from the conversations that we had is that if you're operating in Southeast Asia, you look to be the dominant player across Southeast Asia. If you're operating in the Middle East, you look to become the dominant player across the Middle East and North Africa. Well, as you can see, there are clusterings that seem to appear. UAE and Singapore similarly are smaller geographies in terms of population size, but relatively interesting GDPs. When you look at the larger GDPs and the larger populations, like India, Turkey, and KSA, they look at the markets that you would like to scale into to be able to get growth. And then you have other geographies like Vietnam, Egypt, and Thailand that are up and coming and interesting for many of the founders looking to scale. We actually got a lot of feedback that another way of looking at this is GDP versus not population size, but GDP per capita. So in this chart, we actually separate GDP on the x-axis to GDP per capita, i.e. the purchasing power of the people versus the size of the opportunity. Interestingly, similar clustering takes place, but it gives a little bit more context. While the GDP size in the UAE and Singapore may be somewhat smaller to the larger economies and larger populations, they are much higher in terms of GDP per capita, which is why many of the companies that are located in both of those markets look to headquarter in those markets specifically for B2B opportunities, i.e. business to business. However, to get to scale, they start looking at larger opportunities. Hence, many companies based in the MENA region, headquartered out of the UAE, look to scale into Saudi Arabia, which is the goal of scale here in the region. Not only Saudi Arabia, but the opportunity of Turkey as a second point of example. In Southeast Asia, everyone I spoke to kept on highlighting the point that out of Singapore, while it's the headquarter, you often have to scale into other markets, Indonesia being the equivalent that many of the startup founders look to scale into. And then you begin to cluster many of the other up and coming, emerging, opportunistic markets that can be categorized in the bottom left-hand quadrant as Thailand, Malaysia, Vietnam, many people pointed to as the opportunity for scale, and in the Middle East, Egypt and Pakistan. But ultimately, one of the opportunities that I highlighted, and that if I was a VC looking to operate, is companies that are operating UAE, Saudi, Singapore, Indonesia, and then cross-pollination. I haven't gone into details here in terms of demographics, in terms of religion, in terms of language, but the opportunity, as one founder put it, that is in the travel and logistics space, that for instance, the Hajj and Umrah opportunity across KSA and Indonesia. You look at Islamic finance between Saudi Arabia and Indonesia. You look at education across Saudi Arabia and Indonesia. Must you become the dominant player in each of those markets, or is there a cross-pollination play that becomes extremely interesting to get to scale? Not to mention, we haven't put here because we don't focus on it, India, that falls very much in the middle of those two markets, that is huge in terms of access, but its own challenges of being able to scale into, but also both Islamic and other religions of choice. Just in terms of venture capital as a percentage of GDP, you can also see the development of Singapore. Many geographies here in the Middle East are focused on investing in venture capital, but there's also a need to invest in research and development in general for talent acquisition and to better educate people in the engineering space. But you can see how Singapore is leading in terms of venture capital as a percentage of GDP. But how do the players kind of correlate across these two markets? This is very crude, but we've tried to look at investors, founders, potential exits, players in the market that are similar. I go to the second point that I mentioned at the beginning of the presentation, a perception gap. I think one thing is key coming from the trip is that while people are intrigued by what's happening here in the MENA region, there is still somewhat of a lack of knowledge or understanding of who is who in this market space. In fact, everyone I spoke to when I mentioned Saudi Arabia pinpointed NEOM and the war. But when you talked about who the largest players were, the sovereign entities, who were the companies that received investment, there was still a little bit of a lack of understanding. And yet, if I was to speak to many players, including myself, if not 6-9 months ago, to highlight who are the leading investors, who are the sovereign entities, who are the venture capitalists that are most active in Southeast Asia, many wouldn't be able to answer that question. And herein lies the opportunity for knowledge sharing across the two markets. So in terms of investments, we just wanted to put a bit of context. On the left-hand side are the most funded companies as of the end of 2022 in terms of invested capital here in the MENA region. For anyone here in MENA, familiar names: Kitopi, Kareem, EMPG, which is a real estate platform, Souk, and Pure Harvest in agri-tech. When you look at the industries and the companies in Southeast Asia, not only are they similar in terms of industry, they are starkly more invested than those that have received investment here in the MENA region. Grab, which I used almost daily while I was there, Laz, PDG, Trax, NinjaVan. And so you can see almost a 10x multiple in terms of the invested capital in the Singaporean landscape compared to those that exist here. In fact, when I was speaking to many of the venture capital entities in Singapore, one of the things I kept on highlighting to them, and one of the biggest challenges that they seem to have, is exits. Now, the opportunity, as I mentioned in point 3, was inorganic or organic growth. So organic being coming up and building teams through investments here in the MENA region, but inorganic may be an opportunity to identify companies that do similar opportunities here in the region that in this currently lower valuation climate that we're seeing could be ripe for M&A and acquisitions. And this is a tool that you can now use as MAGNiTT to identify both the companies here, or for those that are getting mega deals here in the MENA region, or those companies that you can see on the left-hand side, for instance, looking to expand into Southeast Asia, can use the platform to identify those opportunities. In fact, our team just onboarded a very well-funded company here in the MENA region that was specifically interested in Singapore for opportunities of M&A and acquisitions. We look at the investment activity. Now, I highlighted, again, it's somewhat unfair in this presentation, and I make it very clear, to compare the whole of the MENA region to one particular geography of Singapore. But again, the investment activity on the left-hand side highlights the most active investors in 2022 by number of transactions. And yet the accelerators or the early stage investors in MENA are almost equivalent to those that invest in Singaporean-based companies. But you begin to see new names: Antler, Seeds Capital, which is government run. You see Wavemaker, Insignia Venture Partners. So you do see different type of entities across the two geographies naturally. In terms of those that deployed the most capital, here in the MENA region, for instance, you can see the likes of Prosus, STV, one of the largest funds here in the region, Endeavour Capital, Wa'id, a corporate venture capital, and Alayan, an investment company, which is similarly a CVC. In Singapore, number one, you can see the magnitude of investment done by those entities. But number two, you can also see entities which are both local and international investing in the Singaporean space. Those which are corporate, more crossover investment in terms of private equity interests, venture capital, and sovereign entities like GIC. So there are some similarities, but some differences specifically when you get to the late stage investments. For those interested, we've mapped out some of the sovereign entities I was able to speak to 2 or 3 of those in Singapore to understand their interests. But what's interesting, and you just have to go to the All In podcast right now, and I had the pleasure of meeting Brad Geisner that was here only 2 weeks ago to do a trip to meet the likes of Mubadala, and did a recent podcast with Jason Calacanis on the UAE ecosystem. You can see that there's a growing interest of people internationally, specifically GPs in the US, but also many GPs that I met in Singapore that are coming to the Middle East to raise funds from sovereign entities. A couple of things that I would definitely share. Number one, they would like you to do your homework, know who they are, see what they've invested in, have an interest in the region. Number two, that point of interest in the region, not only an interest, but the ability to invest in the region. They want to see some skin in the game when they make that sovereign investment, not to invest just in Southeast Asia. So interestingly, a lot of them are looking to raise funds internationally, and I'm not specifically focusing on Singapore, but also the US, and come and raise from the Middle East and then invest back in their home countries. So while I was there, I was speaking to a leading figure at Temasek, and I asked the question, if a Middle Eastern VC was to come and raise funds from Temasek, would you allow them as part of the mandate to specifically invest only in the Middle East? And they said no, their mandate is to continue to grow the ecosystem in Southeast Asia with a focus in Singapore. And the mandate remains very similar here in the region. So I think it's important to try and understand the nuances across those geographies, but also here, and it was stressed by the likes of Jason and Brad when Ibrahim was interviewing them, that building partnerships for collaborations that are long-term are much more fruitful than short-term capital investments. Secondly, there are a lot of government support services across the 2 geographies. So if you're listening to this webinar and looking to set up in the UAE or Saudi Arabia, there are several entities you can reach out to almost support you in the landing program, in setting up, in incubators, accelerator programs, government regulators. Here in the UAE, for instance, ADGM is a leading entity in Abu Dhabi. Here in the UAE, in Dubai, DIFC or DET, which has a specific mandate to try and support you, the Department of Economic and Tourism for Dubai, to help you in setting up. In Saudi Arabia, the likes of MEAPT, MISA for licensing, SVC, and many other entities that help you in scaling to the region. And please reach out if you'd like to learn more about those entities. If you're a Middle Eastern founder, there are many different types of organizations in Singapore that can help you with a soft landing into Singapore. Number one, Enterprise Singapore. I thank them a lot for their support in my trip there. I thank them in their support of MAGNiTT with the data transparencies. But if you're looking for support in setting up, potential support with visas, and connecting to the ecosystem, Enterprise Singapore is a great entity in helping any founders here in the region, and I'm happy to see how I can support in connecting you with them to understand the landscape, the VC landscape, and the entities that exist in Singapore. And finally, nothing is more powerful than going and visiting. I found it hilarious when I spoke to one GP that said, oh, the Middle East, it's a little bit far. Well, it's not. It's 6 hours on a plane. It's less than going to London. And actually, if you go to any of these type of conferences, you can connect with people on the ground. Namely, when you look at the likes of GITEX, which is North Star, the event that's taking place later this year in October, has been heavily advertising to Southeast Asian startups looking to come to the UAE. And the LEAP conference, which is going to be taking place in March of next year, is a great opportunity to visit Saudi Arabia. And if you are here in the region and looking to go to Singapore, the likes of Switch and other festivals that are taking place later this year are great to learn about the ecosystem and connect. So why are we actually doing the presentation? Well, organically, there has been a growing interest of Southeast Asian entities and investors in MENA-based companies. Here you can see the number of institutions in Southeast Asia that have made investments in MENA-based companies in the last 5 years. I do think that the momentum that was building into 2019 was definitely halted because of the COVID pandemic. Even in that time, I tried to do this exercise. And one of the things that was clear was that while people embraced the opportunity of virtual conversations and being able to connect, I feel it was somewhat local. And what do I mean by that? If you're a Middle Eastern investor based in Saudi speaking to an Egyptian founder, that type of activity was happening more and more, even if you were speaking to the UK. But when it came to cultural differences, it was very clear that it's difficult to bridge the nuances of Asia and the Middle East on a 30-minute Zoom call. And now that the restrictions on travel are beginning to get alleviated, more and more entities are beginning to travel across both. I go back to the political ties. We've seen visits by President Xi to Saudi Arabia. In fact, only next month or in June, there is a conference for Saudi-China in Saudi Arabia. We've seen delegations coming from Korea. We've seen delegations coming from Singapore, all of whom are jumping on a plane, meeting each other and building relations across both markets. I was able and fortunate to meet the ambassador of the UAE to Singapore, and there are delegations, including a Gulf UAE Singapore business council, to encourage and foster the activity across the two geographies. And when you look at the conferences that are taking place, there is no better time than now to go and visit the two geographies, even if it's for holiday, in which both geographies are extremely appealing on a vacation trip. Here you can see on MAGNiTT, and I asked somebody from the team to share the article, a list of the entities that have made investments in MENA-based companies. So if you, number one, are raising and look to expand to Southeast Asia, there are a list of VCs who have already invested in MENA-based companies and understand the market. Similarly, if you're a sovereign entity and trying to understand which players have already invested in the region, so when they're coming to raise LP funding for their funds, they have already shown an active interest in investing in Middle East-based companies. So that conversation can help support, develop that moving forwards. But here specifically, you can see Singaporean investors that have made investments in MENA-based companies, and that has accelerated to almost 43 last year. Every one of the entities that I met, and I met over 14 different VCs on my visit, were intrigued by the opportunities. I remember one, for instance, challenged me and said, fine, you talk about inorganic growth. Can you name me a protein insect company that exists in the Middle East? And nervously, I jumped on the platform, put in protein, insect protein, and we discovered 15 different insect protein companies that exist in the MENA region from Africa, Saudi Arabia, and the UAE. Quickly, he got interested, and we've shared the full list with the contact details of the founder for them to begin the conversations with one of their portfolio companies. So there is a growing interest from Singapore in our region, and this is what we hope to see accelerate. Here, for instance, are those names that I highlighted in terms of investors. And again, we created an article that highlighted the trailblazers, and I think that's just been shared in the chat, of VCs and startups that have already come and shown presence in the MENA region. Similarly, there are already startups, and I actively asked many of the VCs, Enterprise Singapore, and the different entities. This is a first stab of Singaporean headquartered companies that are operating in MENA. One of the interesting things is 50% of which are already in the fintech space, the leading industry by number of investments, the leading industry by amount of capital here in the MENA region. The opportunity, as I already highlighted, of cross-pollination for Indonesia, Saudi Arabia, and the wider MENA market makes the play for transport and logistics and financial services that are extremely interesting for cross-pollination. So I'll just wrap up. Number one, I'd like to thank all of the different entities. This picture was shared by our marketing team. I was at INSEAD in 2013. I never thought I'd be coming back as a professional entity looking to launch in Singapore in 2023. But during that time, not only has the venture space accelerated, has MAGNiTT accelerated, but the opportunities across the two markets have clearly provided an interesting time for cross-pollination. And I thank all of the entities here, just a couple that I was able to meet, and I'd love to connect with more, all of whom now have access to the platform to learn more about the MENA region and how they can further learn about the opportunities that exist. But to recap, number one, what do I see as the key point to highlight. One, market similarity. If you are able to successfully operate and scale here in the MENA region, there is absolutely no reason that you can't go and do the same in Southeast Asia. Of course, you have to learn from the experience here that you need to localize, you need to hire talent locally, you need to be able to understand the regulatory and the challenges of each of the different demographics. But if you scale successfully here in the region, it is exactly the same playbook when you're trying to do it in Southeast Asia. Number two, the perception gap. There is stereotypes that exist across both markets. The only way that you can bridge that is by educating, learning more, reading, researching, and traveling. There are multiple conferences that are taking place in both markets. I encourage you to come and visit and connect with the different incubators, accelerators, and services that are there for you to learn more. And that will be key to the knowledge sharing. Importantly, case studies. Success stories breed further success. The more success stories that we speak to, I was able to sit down with the founders of WeGo that very kindly shared their story and success of scaling in Southeast Asia, receiving an investment from MEVP, and moving into the UAE and Saudi Arabia. And they also operate across multiple geographies in both. Learning from the case studies that do exist is extremely powerful. Experienced VCs. I think one thing that was of note is that many of the VCs in Southeast Asia are now on the fourth or fifth fund. Here in the region, they're probably on their second or third. I actually tried to take a little bit of a stab and work out that if I had to put my finger on it, the venture capital ecosystem in Southeast Asia is about 15 years old. Again, many of the same challenges of exits, but it's about 15 years in terms of its evolution. I would say that here in the region, going back to the early trailblazers here in the MENA region, it's probably 7 to 8 years old. There are older VCs, the likes of MEBT, BICO, and Wanda. But if you were to put an average kind of duration of the market, it's about 7 to 8 years old, which means that the market here is about half the age of maturity compared to that of Southeast Asia, which explains the difference in invested capital. The fourth, there is no better time than now for both organic and inorganic growth. Valuation, investment has come down considerably. It is a much harder environment to raise funds. Inorganic opportunities are ripe right now if you'd like to cross-pollinate and consolidate. And the fifth is that there's a growing political interest in both geographies, mainly because of the proximity and the ties that are happening at a government level. It's important to be able to capitalize on that at an economic level, but also at a venture capital level. And ultimately, just to summarize the cross-border opportunities, startups, new market access, learn about more opportunities, inorganic acquisitions, seeking exits that may be opportunities as well. VCs and institutional investors, if you're raising funds in both directions, speak and educate on the LPs, who they're speaking to and their mandates. Exits for your portfolios, either by potentially investing in them to scale or identifying companies that are well-funded in the other markets. Mandate for wider geography and scale. Relevant benchmarks, and that's what we're very keen on through MAGNiTT. We always say that if you're looking for a valuation of a company, there's no point looking at an agri-tech company based in Houston or an agri-tech company that's based out in Silicon Valley. Let's look for the equivalents in the markets that we're operating in. And for governments, stronger geopolitical ties that can be driven through venture investments, through talent, through investment and research and development, promoting local ecosystems across both of the markets, growing the FDI investment in both geographies, and investing in best in class. I think one area, specifically when it comes to industry, that the Singaporean government is focused on is deep tech. And we're already hearing many of those similar conversations that are taking place here, both in Saudi Arabia and the UAE. So the collaboration across deep tech that is ripe for disruption is an area that can help support both. Finally, just to help those that would like to learn a bit more about MAGNiTT and how we can support, I've highlighted this in terms of our geographical coverage. Our aim is to expand in H2 into many of the Southeast Asia geographies. If you do read, you'll see that many of our data points are referenced, and we will be publishing both a MENA report and an Africa report in the early weeks of July. If you are a government agency, a venture capital entity, a corporate entity, or a service provider, please do either email me directly and I'll ask my team to send out email, or sales@magnitt.com to get access to the platform. And just a couple of the features that may be interesting for you. In our directory, you already have Singaporean data that you can access if you are looking to learn more about the companies that exist in Singapore. You can also visualize all of those using market maps based on industry, geography, sub-industries, as well as company types. And all of the data on MAGNiTT is available in real time that allows you to manipulate the data using our advanced analytics tools, whether you're looking at average valuations, average deal size, most active investors by deployed capital, most active investors by number of exits, or benchmarking geographies across different areas. All of that is available, including up-to-date data, which is verified by the data team here at MAGNiTT. And if you're interested in our research reports, you can access them on the platform, as well as any of the APIs that may be of interest to you to plug into. So I will stop there to allow for questions. I'd love to hear any thoughts or questions. We have a chat bot open for anyone that has any questions or thoughts, and I'll leave the call open for the next 10, 15 minutes. Hi, Sophie. Thank you for your question. Like to see your opinion on the industries other than fintech that may be of interest. So let me just stop the share. Yeah, so I think I would say, as I mentioned, sorry. The first one that I would mention is deep tech. I think deep tech is definitely of interest to both governments. We're specifically working with one here in the MENA region to do a report, which we hope to publish later this year. I think that's an area of focus. Fintech remains the industry that is most interesting for VCs and for startups. In both geographies, I believe it's of particular interest. There's fintech festivals that are taking place in both. But let's not discount areas of entertainment. We look at the likes of Views 360, and I was speaking to the founder and how you can use entertainment, visualization for the likes of Hajj and Umrah, for concerts that are taking place. Saudi Arabia is going through a revolution for entertainment, and entertainment industry is ripe for disruption in terms of digitalization. You look at healthcare, you look at education. One of the key prerogatives for a government is to try and support telehealth, as well as health travel, health tourism across the different geographies. And when you break down each of the different areas of industry, I think there are many that exist that can support cross-pollination across both Southeast Asia and here. But specifically in Singapore, I know that areas of manufacturing, deep tech, AI technology are very critical to their government agenda. Throughout the conversations with different founders, what are the main barriers faced when expanding into Southeast Asia, especially for startups of substantial level of maturity? Look, I was only able to speak to some, but I think that similar to the MENA region, the three biggest challenges that exist are: one, access to talent. Now, the market is a little bit more mature, and there are strong educational institutions, specifically in Singapore, that can allow for coding and education in the startup space. On the podcast that I was listening to yesterday, Unfiltered, which includes some of the VCs from Open Space, 500 startups, and others in Southeast Asia, they were talking of the maturity of the ecosystem. Founders that have been around for 5 to 6, 7 years, then look to new CEOs, new C-suites that can come from the industries, including banking and consulting, to help grow the scale-up phase of the company. And that is very different to the skill sets that are required for the original founders. So access to talent in both geographies are extremely key. The second is size of market. And so here in the region, we always say that it's very difficult to scale because of the challenges of each of the different geographies, whether it's opening up, whether it's licensing, whether it's bureaucracy, whether it's regulatory challenges that exist. For each of those, you have similarities in Southeast Asia. When you're trying to operate in Indonesia, when you're trying to operate in the likes of Thailand, Malaysia, each of those have different licensing requirements, employment requirements. And so that's the second biggest challenge that exists. And associated that is demographic. So here, when you're in the UAE and then scaling into Saudi Arabia, you do have a high GDP per capita. But when you go into Indonesia, while it's a massive market of 220 million people, the GDP per capita is a lot smaller given that size of market and the size of the GDP. Having said that, if you only take 10% of that population, it is still larger than many of the geographies that exist here in the MENA region. And I think there was a very interesting tweet that was shared, and I retweeted for anyone that would like to visit it, from Eli Habib here in the Middle East, who's the founder of Anghami. He pointed out to what is the size of the most prosperous countries by number of population here in the MENA region. And they're very small until you get to the likes of Egypt and Iraq. But when you go to Southeast Asia and you look at the likes of Indonesia, you look at Taiwan, when you look at the Philippines, there are more populated countries in Southeast Asia than exist here in the region. And then finally, access to venture capital. Access to venture capital remains a challenge globally, given the mandates that exist. There are several funds, but there are that many more startups in Southeast Asia, and being able to access that capital remains a challenge, as with here in the region. And ultimately, the most important that was highlighted to me many times, exits. I think there is a misconception that there is a path to IPOs in Southeast Asia that exists that is easier than here in the region. I think especially now in these challenging economic times and financial times for IPOs, less and less startups are able to get to IPO because of the regulatory requirements and the requirements for listing that exist. That's very similar in Southeast Asia as it is here in the region. And so ultimately, the liquidity that comes back into the system, we estimated that there've only been 6% of all companies that have raised funds here in the region that have actually exited in the last 10 years. And that's not to say they were good exits. So exit is probably becoming quickly one of the biggest challenges. Thanks, Thomas. Great to see that you were in INSEAD as well. I'd love to tell you that I knew enough about the mining industry to be able to share insights on that, but unfortunately, I think that is not one that I am well versed to be able to expand on specifically. How do you, Anisha asked the question. Hi, Anisha, also from INSEAD. Good to see a strong INSEAD contingency. How do you see the economic climate around fundraising changing in Q3 in the region? Well, if I have to be absolutely honest, I don't see it changing. I think that we are going to continue to see a slowdown in investment activity this year. I cannot see that there has been a huge injection at an LP level in local VCs. I think that as long as valuations continue to come down, it remains in the interest of VCs to hold out. We have done a whole piece on MAGNiTT about the seasonality of the MENA region and how Q3 has historically been the lowest quarter of investment activity for the last 5 years. The positive thing to say is by the time Q4 comes in the hope that the interest rate hike slows down into the summer, if markets continue, albeit I'm still pessimistic on the financial markets, but if markets continue to buoy and we see stronger Q2 earnings and the inflation continues to slow down and reduce, it is very likely that interest in investment will pick up in Q4 leading into 2024. But I very much anticipate that that won't be the case in Q3. Having said that, one thing we definitely know is that it takes about 6 to 9 months for fundraising to take place. So you definitely need to start having the conversations now, even if you look to close at end of year. As a service provider for expanding companies in Saudi, do you think MAGNiTT is a relevant platform where you can find companies to whom we can add value? Yes, Ibtisam, 100%. We work with service providers. You can identify using filters companies that are likely to be fundraising, companies that are well-funded, companies that are looking to scale. You have the headquarter of those companies on the platform. You can see the branches of those companies on the platform. You can see the number of employees of those companies on the platform. So while we might not be able to identify specifically which ones are looking to scale into Saudi Arabia and Dubai, the team are very well versed, especially with the account management team that support our clients, to use proxies to be able to identify those opportunities. The trend may ask the question, the trend of the ecosystem is mainly about Singaporean VC raising funding from LPs of MENA and invest back to startups of MEAPT region? Question mark, thanks. I don't think that there is a trend to speak to yet. The trend is VCs globally with their GPs are coming to the region to raise funds. The feedback has been to many clients that we're speaking to that are LPs that great, but we would like to try and build relationships with these entities. I think it was a very interesting anecdote that we've had conferences going on in the Middle East for the last 4 or 5 years. Many of these VCs that are currently coming to the region have been invited to these conferences for 4 to 5 years, many of whom have not been coming for the last 4 to 5 years. And yet now, where there's a need to raise LP capital, many of them are coming and asking for funding. The challenge remains that you need to build relationships. I've been in the Middle East since 2008, where I was a consultant and a banker. And I remember being informed that instead of looking for transactional relationships with clients, you need to build relationships with them. And when you become a trusted advisor to them, you're more likely to be able to garner capital and deals, etc. So to all of those VCs that are coming, there is capital. There is an interest for best-in-class VCs in the region. There is an interest to support you, but you need to build that relationship. You need to partner. As Brad Geisner was saying, you start sharing case studies, you start sharing intelligence programs, you start doing podcasts, you start shedding a light on many of those different type of conversations. And then through time, that funding comes. So I don't know that it is to specifically invest back into the MEAPT region. What I am keen on highlighting is that there remains opportunities. So even if it isn't to invest directly now, it could be to support your portfolio companies to scale into the market, but there does need to show a level of commitment to the markets from which you're raising. Thank you, Habib, for the kind words. You mentioned that Singapore VC is about 14 years old. Impressive growth over the years. What do you think players in the MENA market can learn from Singapore VC market? I'd love to be able to share that insight. I think number one, it takes patience. Again, on the Unfiltered podcast yesterday, Hiskian was talking about how it takes time, it takes patience. He was talking about how it's 10 years since he sold his company and he's been doing investment and he's still trying to identify the opportunities and trends for exits. So it's not dissimilar. The game is not completely dissimilar. I think that the learning lessons now are those VCs that have operated in downturns, i.e., I don't think that there have been many MENA VCs that have actually operated in down economic environments. Not to say that they haven't experienced the economic challenges of 2008 and 2000, but as venture capitalists, have they been able to learn some of the learning lessons that came out of that? They have experienced that to a certain extent in Southeast Asia. They also have had all of the challenges of companies scaling into specific markets. What worked, what didn't, what makes for a successful startup, what is useful unit economics, what are the challenges with exits. Interestingly, you take the case study of Uber and Careem. Uber acquired Careem. Grab, which is the biggest competitor to Uber in Southeast Asia, acquired Uber's presence in the market. So what are the challenges that come with international competition and how should they be embraced? How do you raise LP funding from international LPs, not sovereign LPs here in the region? And what is the interest and the success stories when you raise 4 to 5 funds of the storytelling to be able to capture that investment capital? So no doubt there is a huge amount of learning at an operating level, at an investing level, at a successive exit level that can be shared across both of those markets. Willie, thanks for your question. Is expand on your point on perception of easier exits in Southeast Asia. Wouldn't you say that the exits in the Singapore Stock Exchange being a much larger, much more conducive exchange to listing successful startups compared to Sharjah? So look, I need to do a piece on this, but having spoken to VCs and the government in Singapore, they made it apparently clear that there have been less than a handful of tech IPOs listed on the Singaporean exchange. The perception is the size of the market is bigger, which is true, but I can tell you one of the feedback that I got while I was in Singapore is that they are far more conservative and rule-based than we would anticipate. The structure and the ideology and the education system that they have is one of rules and almost conservatism. So when you are looking at these high growth tech companies that are not unit economic profitable, which do not show a path to profitability, that are still looking to get to scale, I am pretty sure that unless they meet specific regulatory requirements for listing, that they are unlikely to have been able to list on the local Singaporean exchange. And therefore, while there is a perception that it's a much more mature market, the feedback that I received, and I'm happy to be proven wrong and to do my own due diligence on this subject, is that actually there haven't been many. And while here, DFM and in Abu Dhabi and in Saudi Arabia, there is a push for listings, I think that there is an air of caution, especially when you see some of the challenges of the companies that have SPAC'd on the NASDAQ and the listings that have already taken place here in the region, that I don't think, given that it's the public money that is being put into these private organizations on the listing, that it shouldn't be at the compromise of the regulatory requirements and the listing requirements that make for successful companies to list. So I still believe that there is a general air of caution towards this compared to what's taking place in the US. I will just wait 1 or 2 more minutes in case there's any other questions. Great. Like I said, this is our first step into expanding into Southeast Asia. I'm particularly excited about this. I think that there's a huge growth opportunity in both markets. I think for a while, both have been quite siloed in knowledge and opportunity. And I'm excited to see the feedback. If anyone has any thoughts, please do share. This video will be made available and recorded online. I'm happy to share that with anyone. And if there's anyone that's interested to learn more about the landscape or to get access to MAGNiTT to support you with your growth, please don't hesitate to reach out to me and or sales at MAGNiTT. And I'll share that now in the chat. Thank you very much. And as always, love to hear your feedback on how we can improve this and other webinars moving forwards.